U.S. oil floods Europe, hurting OPEC and Russia. U.S. oil output is expected to hit 10.7 million barrels of oil per day this year, rivaling that of top producers Russia and Saudi Arabia. Reuters File Moscow, London. As OPEC's efforts to balance the oil market bear fruit, U.S. producers are reaping the benefits, and flooding Europe with a record amount of crude. Russia paired with the Organization of the Petroleum Exporting Countries last year in cutting oil output jointly by 1.8 million barrels per day, BPD, a deal they say has largely rebalanced the market and one that has helped elevate benchmark Brent prices close to four-year highs. Now, the relatively high prices brought about by that pact, coupled with surging U.S. output, are making it harder to sell Russian, Nigerian and other oil grades in Europe, traders said. U.S. oil is on offer everywhere, said a trader with a Mediterranean refiner, who regularly buys Russian and Caspian Sea crude and has recently started purchasing U.S. oil. It puts local grades under a lot of pressure. U.S. oil output is expected to hit 10.7 million barrels of oil per day this year, rivaling that of top producers Russia and Saudi Arabia. In April, U.S. supplies to Europe are set to reach an all-time high of roughly 550,000 barrels of oil per day, around 2.2 million tons, according to the Thomson Reuters Icon Trade Flows Monitor. In January to April, U.S. supplies jumped fourfold year-on-year to 6.8 million tons, or 68 large Aframax tankers, according to the same data. Trade sources said U.S. flows to Europe would keep rising, with U.S. barrels increasingly finding homes in foreign refineries, often at the expense of oil from OPEC or Russia. In 2017, Europe took roughly 7% of U.S. crude exports, Reuters data showed, but the proportion has already risen to roughly 12% this year. Top destinations include Britain, Italy and the Netherlands, with traders pointing to large imports by BP, ExxonMobil and Valero. Polish refiners PKN Orlen and Group Lotos and Norway's Statoil are sampling U.S. grades, while other new buyers are likely. David Weck of Vienna-based JBC Energy Consultancy said, there are a number of customers who still may test U.S. crude oil. Weck said, the gains for U.S. suppliers could come as a welcome development for U.S. President Donald Trump, who accused OPEC on Friday of artificially boosting oil prices. Looks like OPEC is at it again. With record amounts of oil all over the place, including the fully loaded ships at sea. Oil prices are artificially very high. No good and will not be accepted, Trump wrote on Twitter. While the United States lifted its oil export ban in late 2015, the move took time to gain traction among Europe's traditional refineries, which were slow to diversify away from crude from the North Sea, West Africa and the Caspian. European refiners started experimenting with U.S. crude last year, said Ahsan El-Haq, director of London-based consultancy Resource Economics. Now, they know more than enough to process this crude. U.S. oil gained in popularity, sources said, in part because of the wide gap between West Texas Intermediate, the U.S. benchmark, and dated Brent, which is more expensive and sets the price for most of the world's crude grades. This gap, known as the Brent-WTI spread, has averaged $4.46 per barrel this year, nearly twice as high as the year-earlier figure, Reuters data showed. Weck of JBC Energy said the spread would likely persist in the near future. The most popular U.S. grades in Europe are WTI, Light, Louisiana Sweet, Eagle Ford, Bakken and Mars. Prices for alternative local grades have been slashed as a result. CPC blend differentials recently hit a 6-year low versus dated Brent at -$2 a barrel. Russia's Urals also came under pressure despite the end of seasonal refinery maintenance. WTI was available at 80 to 90 cent premiums delivered to Italy's Augusta, well below offers of Azeri BTC at a premium of $1.60 a barrel, according to trading sources. U.S. oil is even edging out North Sea 40s, which is produced in the backyard of the continent's refineries. Cargoes of WTI were offered in Rotterdam at premiums of around 50 to 60 cents a barrel above dated Brent, cheaper than 40's premium of 75 cents to dated, less than previous page. Next page greater than.